Hello, good evening, good morning, afternoon, wherever you are watching this video from. Today, I want us to talk about these key things that I've just listed on my screen here. To be able to create a single day setup on gold that can yield you 400 plus pips, you need to understand certain things. You need to understand these key aspects that I've just written on the screen right here. Guys, welcome to DFA community. There is a massive and a deep platform where we share ideas. Subscribe to this particular channel for an in-depth knowledge of the concept about forex trading, crypto trading, and stocks trading. So if you find yourself watching this video, or if you find yourself in this particular environment, you are at the right place. Stay tuned, have the patience. If you cannot even watch the video to end, it means you even have a problem with patience. So develop the patience, relax, have the patience, and let's dive much into these concepts. So what we are going to discuss right now are these key items that I've just listed on the screen over here. Now, as you can see, we have these key aspects. As I've already said, they are on the screen. You can see them. Now today I developed this setup and it gave us 400 plus pips. So if I'm to put the mouse on the percentage and also the profit too over here, as you can see, the target is 49.607. so for gold, you're going to move the first digit after the point, or after the decimal point over there. So 496 pips trade setup today, only today, a single day. How did I came about this idea that is yielding us 496 pips per a day? Number one, what we are using over here to be able to just have an in-depth knowledge about this particular key things, you need to understand these 6 items that I've just written on the screen. Number one is understanding the 3 concepts. Understanding the 3 concepts, which is AMD, the 3 stages, or the I call it behind scenes knowledge, the behind the scene knowledge that is operating on the system: accumulation, manipulation, and distribution. To me, if you want to explain deep into accumulation, manipulation, and distribution, it is actually a state of price where there is a fight between buyers and sellers. So when you look at the footprint of these candles, they are numbers. They are actually numbers which are found in an order book. When you check the order book of transactions, you will see these numbers over there. So on your chart, if you see these candlesticks, they are numbers. Behind the scenes, they are numbers, or order numbers, buying orders in numbers and selling orders in numbers. Now, understanding the concept accumulation, manipulation, and distribution. So how we came about with this strange or this massive trade setup yielding huge profit pips was understanding the accumulation of the chart, or accumulation of the system, manipulation of the system, and distribution of the system. These 3 items, they happen together. But if we are to use time frame or time intervals for them, each one of them has its own time that it happens, or it finish creating those tabs. So when you take accumulation, there is a point in time you see the market accumulating orders. taking in orders. Manipulation. The manipulation stage is where a decision or is an action where the fight between buyers and sellers, the whole transaction was going in the favor of the sellers, and all of a sudden the buyers took over. Or it can be a scenario where the buyers took over and the sellers also just took over again to create that manipulation. So when that happens, after that, what happens is that the one who wins is a fight between buying orders and selling orders. So the one who wins will go to that particular direction or continue in that direction, which we refer to as the distribution stage. So these stages are the accumulation stage of the system, the manipulation stage of the system, and the distribution stage of the system. You must understand the three powerful concepts or the behind the scenes knowledge or idea that is operating on the system. It is an algorithm being created. Understanding the AMD, which is accumulation, manipulation, and distribution. And number 2, respecting the three friends' behavior. The three friends' behavior. So each one of them is having its own behavior. Now, these three friends, who are they? Let's mention them or let's talk about them. Number 1 of the friends, I call them friends. Number 1 is market shift. Market shift or change of character. Or market shift or change of character. Then the second friend, I call that particular friend an order block. Order block. Then the third friend, I call it a fair value gap. A fair value gap, and also you can call it, let's say, leftover orders, or leftover orders, or leftover buying orders or selling orders. Then this particular friends, the order block, the market shift, the fair value gap, anytime price creates or breaks a particular structure. When I say structure, it could be a lower high, it could be a higher low. Anytime there is a break of structure or there is a change of character, two things happens. Take note. Two things happens, which is an order block will be created and a fair value gap will be created. Listen carefully. When there is a change of character, always the algorithm is that how they have designed or how they have programmed the system is that the system must create an order block and a fair value gap anytime there is a change of character. So if you check the chart, anytime price shifts in structure, breaks a particular structure, an order block will be created and a fair value gap will be created. You must respect these particular zones. You must respect these particular zones. You should know how to trade order blocks or fair value gaps. If you want to learn how to trade order blocks, fair value gaps, I have a video that I'm about to upload. You can tap into that video and you will dive much into order blocks, fair value gaps, and also order flow. Then the next thing you are supposed to understand is understanding liquidity ends. When I say liquidity ends, where is price moving from and getting to or heading to? When price moves, it moves from a particular point to a particular point. Where is price heading to? I believe all of us have been traveling or have been moving around, even in our own circle or even in our own environment. You can move from your trading room to your hall. You can move from your compound to outside. You can move from your car. You can be walking around, running from here, jogging. We move from one point to another point. So you must understand where price moves from and where it gets to. So in between these two ends are what we term as liquidity ends. So there are certain points or there are certain places where price gets to. These are the most important areas for price. It's not solely about you seeing the candles forming, bearish candles forming, bullish candles forming. they are heading to specific places. You must look out for those places. Every single candle is having its own liquidity sweep, or its liquidity end at the top and its liquidity side at the bottom of the candle. So we must understand where price moves from. Then the next thing that I want us to talk about is candle closures. You see a lot of traders, they just jump into trade without a candle being closing. As you can see from the screen, there is a small bullish candle forming. You see most people jumping into trade without waiting for the candle to close to give them extra confirmation. So before you can have a serious trade setup or have a massive setup like this, you have to understand how candle closures are very, very important in the life of a trader. Then the next thing I want us to talk about is understanding market structure. When I say market structure, let's look at the setup. Let's look at the setup over here. Let's look at this huge profit setup over here. So as you can see, everything started from here. This area, price moved downwards to this area, gets to this area. We had a little downtrend here, then we have this last massive end over here. So as we can see, price created a higher high, created a pullback, and also created another higher high again, created a small pullback over here, and continue to the upside. This is what we refer to as market structure. You see some people shivering when they see a small pullback, thinking price is about to reverse. Let me give you a clue. Until you see price breaking the last higher low or the last lower high, don't panic. Leave the trade to run. Leave the trade to run until you see a change of character. That is where you can exit your profit. You can exit the trade and take your profit. When I make a setup, when I target a particular area, I believe price will never move in a straight line. Price will never move in a straight line. I understand market structure. Price can move in so many directions, but at the end of it, or at the end of the day, price will get to the area that I'm expecting. This also talks about you having the maximum patience and also understanding market structure. So before I exit my trade, unless I see a change of character, character, or a market shift as well, a change of character. Sorry guys. So that is that about how to create this particular setup. Now everything started from this huge setup that you see over here. Let me just do away with this line so that you can see how beautiful everything played out over here. We took massive profit, or we had massive turn out today. Today is Monday, not any day. Check the day. Today is Monday, December 24. Yeah, Monday 12:30. So everything started from here in the when market opened Sunday, December 11-15. Everything started from here. So now with the trade setup, what we do is that after understanding the three concepts, which is the AMD, we must have a particular day. We must have a signal day. We must have a signal day, or we always wait for a manipulation to happen before we join the distribution stage. We keep things simple here. So that is how we do everything. Your profit is the distribution part. Your stop loss or your stop hunting is the manipulation part, and your accumulation part, the patience area, building of patience or accumulating orders, is the area where you see price to be ranging here and there, taking liquidities here and there, static liquidity here and there. So with this particular setup, we use three scenarios. We always go by the AMD. To have a serious setup like this, you need to follow or understand, dive much deeper into the AMD concept. So this is what we are using to trade will follow the behind scene knowledge of the system, which is the accumulation stage, the manipulation stage, and also the distribution stage. So guys, thank you. These are the things you must take note carefully. Understanding the three concepts, respecting other blocks, because when there is a change of character, price will always come back to an order block or a fair value gap, just to take the left orders over there. Simple as that. And also respecting candle closures, understanding liquidity ends, patience, and understanding market structure. So guys, these things or these informations, you must pay attention much to them, and it's going to have a serious or massive change in the way you trade in 2025. See you in the next video. If you haven't subscribed to this channel, that is DFA Community, subscribe and let's dive much, or let's talk about most important things of the system or the hidden algorithms of the system in a simplified manner. See you